Will interest rate rises mean that Brisbane property will now fall? Okay, if you have recently invested in Brisbane or you're looking to buy an investment property or two in Brisbane, but you're not sure how rising interest rates, and let's be honest, they're rising, how that will impact your potential investment or your current investment, then that's exactly what we'll be doing a deep dive on today: interest rates and Brisbane property prices. If you're interested, carry on watching. My name is PK and I help people build passive income through the Property Investment Accelerator mentorship program using data without needing a $15,000 buyer's agent every single time. Hit the subscribe button, turn the thumbs up icon on this video. In this channel, we talk about property investing, we talk about the Australian economy, and we talk about financial happiness. Let's get into it. So I have a chart to share with you that explains my thesis or my hypothesis, but just to back up a bit, now interest rates have risen a couple of times. They'll continue to rise. How much they will rise, I personally think, and none of this is financial advice, it's just my take on things, I think they will go up to between 1.5 and 2%, at which point the economy will start to teeter a little bit. You know, GDP growth might even go negative, or it might shallow out, at which point, just like CBA is predicting, interest rates might come down again. But why am I saying all this? I'm saying all of this because a lot of you are super scared to invest in property, especially if you're brand new. Those of you who have been investing for 5, 10, 20 years, you know how cycles work. You know how the best time to buy is when you can afford it, because in the long term, it's going to do well. At least that's what history tells us. But those of you who are brand new to property investing, I've done many videos on how interest rates aren't automatically a predictor of house price decreases. In fact, that hasn't really occurred in most instances in Australia in the last 50 years. However, if you're still kind of, scratching your head, maybe your wife or your husband or your spouse, really doesn't want you to take that first step, that next step into property investing, this video will do a deep dive on Brisbane. So hopefully data can help you overcome your own fears. Don't listen to me. I'm just some random guy. Allow yourself to come to an intelligent conclusion using data. Here's the chart. So what you're looking at, this is from PRD, and the source is the RBA, Price Finder, and Haver Analytics. What you're looking at is the cash rate, the official cash rate, okay, this the grey chart or grey line, and Brisbane local government area, so Brisbane City Council's median house price over the last, since 1995. So it's a decent period of time. And there's 3 key takeaways. So the first takeaway is in this period here, around year 2000, when interest rates rose by 0.5% or 50 basis points, this red line, which is median value or median house price, it didn't go backwards. It continued to go up, all right? So now, of course, you'll be saying that, it was a very slight interest rate rise here, PK, only by 0.5%. We've already had that and more, so it's not really comparable. I agree. No, good call out. Second one. Okay, leading up to 2006 and beyond, we've increased, or the cash rate increased by 0.25%. In fact, since this time, the cash rate had been going up steadily. All right, so back here it was 4% back in 2002, and we finished up in 2008, just before the GFC, with a cash rate of close to 7%. So it went up by close to 3%. Okay, is the cash rate going to go up by 3% this time? Chances are it won't, but you come to your own conclusions. I just shared with you what I thought or think will happen at the start of the video, and all the major banks in Australia at least don't think it will go up by this order of magnitude. But come to your own conclusions. But even having gone up by such a big magnitude, you can see that this red line, in fact, Brisbane was going through a boom. Okay, the Brisbane property price in 2002 was about 200, and you can see by the end of 2008 it was, touching 500, touching 550. So you can say it more than doubled in a quantitative tightening cycle. So as interest rates were rising, so too were house prices. In fact, they more than doubled. Okay, and then you had another smidgen of interest rate increases here just before 2011, and that definitely meant that house prices in Brisbane just shallowed out. Now, it was coming off a huge period of growth, and it just shallowed out here. So the conclusion from this chart, you come to your own conclusions, but my conclusion is that interest rate rises don't automatically mean that house prices will fall. Now, does that mean that we should be buying in Brisbane right now? My money is to say that freestanding houses, they could experience a bit of a correction. Townhouses may have more opportunity for growth because they haven't grown so much compared to freestanding houses, but we're not really buying in many or most parts of Brisbane anymore freestanding houses because they've just gone up so much. They've gone up by 50, 60, 70% in some instances. So do you want to buy at the bottom of the cycle, or do you want to buy at the top of the cycle? Having said that, I don't think Brisbane will all of a sudden collapse. Melbourne and Sydney are likely to do so. I've done so many videos over the last 6-7 months saying how Melbourne, Sydney prices are overcooked and are likely to retrace, not financial advice, but may retrace 10 to 20%. I've done many videos on that. I haven't done videos on that on Brisbane because I still think the demand versus supply dynamic is imbalanced, and there's so much demand in Brisbane, including in the rental market. However, after such a huge rise in price, there's always a somewhat of a correction. Okay, and interest rates may just be the catalyst for Brisbane property prices in some parts, not everywhere, to just come down by a few percent before they start going up again. Now, you cannot generalize Australia as one big property market. Adelaide is a different story. It's rocketing on. It's completely ignoring interest rates, similar to Perth, which is right at the bottom of its cycle, relatively speaking to the other capital cities and regionals as well. So, anyone who says don't invest in property because interest rates are going up, well, that's their opinion, and everyone's entitled to an opinion. But I'm just trying to share with you the data so you can make your own opinion based less on hearsay and scaremongering from the media, based more so on what real data says. If you want the same chart as I've explained to you here for Adelaide, for Perth, for other regional areas, leave a yes below in the comments. YES, leave a yes below, and I'll try to once again demystify the property market for the benefit of all of you guys. Always remember, the most important real estate to invest in is the 6 inches between your 2 ears. Level up your knowledge. My podcast is below. Facebook group with more than 16,000 people. Really learn and then make a decision. Don't make a decision and then think, now I have a property, let's start learning. No, it has to be the other way around. My name's BK. Smash the subscribe button. Thank you for always being with me. Take care. Bye.